Hey everybody, Brian Shannon here from alphatrends.net. It's Friday, the 11th of October, and we're starting to see a lot more participation on the upside in this market after some failed moves. So let's take a look at the charts and make some sense of it. We'll start with this colorful graphic of the S&P 500, the NASDAQ, and the semiconductors, along with the Russell 2000 down here. They are all above a rising 5-day moving average and making higher highs and higher lows above them. Russell 2000 is a little bit different. We'll talk about that more in detail, but nothing changed this week. We're above a rising 5-day moving average, and that gives the benefit of the doubt to the buyers. So here's the S&P 500, and today we saw a resumption of the upside, and we have another level of resistance that was broken that has the potential now to become support on any pullbacks. We're above this rising 5-day moving average, so it's innocent until proven guilty. As you know, a couple weeks ago, we were cautious over in here below the declining 5-day moving average, but we weren't bearish because the longer-term trend was higher. We became bullish this week as it got back above that rising 5-day moving average, and that was the correct way to do it. I mentioned that last Friday, that now is the time that we're buying strength after the dip. Same is true for the NASDAQ. We don't buy while it's below the 5-day moving average. We buy strength after the dip, and that's exactly what we saw. We have a little bit of trouble here the last couple days with this 494-ish level that is this prior little peak. I don't view that as a big deal. It's just a level of interest. We have a pattern of higher lows and higher highs above that rising 5-day moving average. Unless that changes, I'm not going to change the tune, which is the buyers get the benefit of the doubt from the longer term time frame and the intermediate term time frame. Russell 2000 was the most interesting here because it looked like it was going to get going on Wednesday. I had mentioned that I thought it was time for this one to get going in here. It failed during the day. I had sold towards the end of the day because it was basically break even. I didn't want to lose money ahead of the PPI. The PPI came out, we gapped lower, but we saw this fantastic recovery. I'm not involved in the Russell 2000 right now. Let's take a look here, back up with all those drawings. This is that downtrend line that we had there, and here's the anchor off of this low. So ideally, next week we see a little bit of a pullback. It's not really possible. I mean, it's quite possible that we just see this market continue to rally, and that could be the problem with this particular entry. So know where your risk is, but I'm hoping that we can at least get a pullback down towards about that 220 level, and then if that's the case, we see it kind of do something like this. For me, the purchase point would be right here with a stop below whatever this higher low ends up being. That higher low might end up being down here, so the stop would go below that level. But this daily chart, we now have, you can see in here, that 50-day moving average in here is rising. The reason it's rising is that we averaged out this data right here today. This was 50 days ago. So on Monday to, all of next week, when we get rid of this data, that 50-day moving average will be rising again. And that's what I'm always talking about, is anticipating the direction of the 5-day moving average. Just like when we see the 5-day moving average. Monday, we get rid of this data. So even if the market is lower, the Russell is lower on Monday, that 5-day moving average will come up, and hopefully it can meet that and make a higher low at that 5-day moving average and continue to move. I don't know exactly where I'm going to buy this thing, but I'm interested in buying the Russell 2000 because it looks like the buyers have regained control right at that 50-day moving average, right at the anchor off that August 5th low as well. Semiconductors, you can't talk about semiconductors without first talking about NVDA. NVDA continues to be the leader here. I sold mine yesterday for the members of the premium on Alpha Trends Twitter. They're still involved with stops here. And if you're not familiar with what I'm talking about, go to alphatrends.net. Twitter.com or X, and click that subscribe button. For $10 a month, I give you this type of analysis every single day at the end of the day. I've also been doing it midday, talk about Bitcoin as well, and just a whole bunch of other information. In fact, here's kind of what it looked like this week. I had this video in there that I did. Today we spoke about, what this provides, some Bitcoin analysis. This is all from this week in here. And, for instance, avoiding the massacre that occurred in Tesla. Basically what I was saying in there is, as long as we're below a declining 5-day moving average, there's no reason to be a better in front of the news, because news and surprises follows the direction of the trend. And in this case, had you bet on this on the outcome of this Tesla event to the upside, well, you would have gotten hurt pretty badly in here. So let's go back to the NVIDIA analysis because it continues to behave well. This is the current place where I'm suggesting stops, two stops, just to loosen it up a little bit on half of it, and just in case it gets a hard reversal, to lock in some gains up there. But NVIDIA clearly is the leader, and it's dragging the semiconductor index with it. We continue to see the same pattern here, higher highs and higher lows. So if we get a little pullback on Monday, even down to the 5-day moving average, I would think it's more likely to do this than to do something along the lines of this. Doesn't mean this isn't possible to happen. That is, that maybe we pull back and begin a deeper pullback. But right now, the path of least resistance is higher on this above the rising 5-day moving average. So you give it the benefit of the doubt and you ask yourself, where does it come from? It just came from 237 up to 257. So, we've just rallied close to 10%. Buying up in here, buying this breakout is typically not the best purchase area. In fact, when you get up there, if you're going to be making new purchases in this area, you've got to have much tighter stops because the odds of it continuing at this pace are less likely. So the job now is to manage risk for the time frame that you're involved. Semiconductors remain innocent till proven guilty. Give them the benefit of the doubt, but know where your risk is if you're looking to lock in some gains. The biotechs, they reversed pretty hard here as well today. They broke this pattern of lower highs and lower lows here today, and they had that higher high. What they don't have is a nice higher low. We came right to the declining 20 and 50-day moving average as well as the anchor off of the August 5th low. So I didn't chase the biotechs higher. I think, though, if they can do something along the lines of this next week, same story as what I just said for Russell 2000. I'd like to be a buyer somewhere around this area. Worst case stop under here, I'd rather have a stop somewhere up under that area. If this 5-day moving average continues its trajectory, then it will likely hold as a support area here. Maybe Monday, maybe Tuesday, it's a good buy. But I'd love, and the risk for me is not being involved. Maybe it just does this. I think, though, that this is the more likely scenario, and that's what I'm personally waiting for. If I miss a trade, I miss a trade. That's the way it goes. Nobody gets them all. It's about having a consistent, disciplined approach to the market that you have confidence in. It's not about getting every single trade. So anyways, back to the financial stocks. We had bank stocks report earnings. These guys are at another new all-time high. When we've got semiconductors, leading the way, we've got the Russell 2000 ready to break out. Let's look at the Russell on the weekly time frame. Ready to break out here. Biotech's ready to break out. This market is strong, but it doesn't mean you don't let your guard down. You've always got to be aware of what your risk is. So biotechs, that's what I'm looking for. Let's look at energy names. Energy names, they continue to behave well. They bounced right from the anchor off of, what was it, this low right in here. So, the buyers are in control of the energy names. Hopefully they can do something like this. I had mentioned a energy name that looks good for next week on Twitter for everyone to see, and that's the anchor off of this peak. This is AR, Antero Resources. If you look at that weekly chart, we're above all these key moving averages on the weekly time frame. What I'd like to see here with this declining 5-day moving average is it's probably a day or so early because Monday we get rid of this data, meaning that even if the stock rallies like this on Monday, that 5-day moving average will continue to decline on Monday. So instead, I'd rather see it kind of shake out a little bit, consolidate, and then if I was to be a buyer, I would say you want to see it hold that 5-day moving average. That 5-day moving average begins to turn maybe on Tuesday. Buy it above there. Absolute worst case stop underneath here. This is the 200-day moving average. That black line, the red line, is the 20-day moving average. This is the anchor from the high of this year. So the buyers are gaining back control, and that's a good one to keep an eye on if you trade the energy names. Let's take a look at Bitcoin because there's a big reversal there as well. Yesterday, we were looking like we were failing, and we were in fact failing right at this key inflection, this 60,000 level, where we had all these anchors lined up. And you can see that intraday, we got hit pretty hard, down to 59,000. So today, overnight, this morning, we saw it rally very hard. What I'm hoping we can see is kind of the same story, maybe a little bit of a pullback in here and then get going. I think that now we're looking at Bitcoin. It's right up against the anchor from the all-time high right here. So I didn't chase this today. I've got about a 6% position in here. I'm looking to add aggressively after a pullback in Bitcoin. The other names, I guess that will do it for now. So give the video a like, subscribe to the channel, and check out that Twitter subscription. It's a great deal for just $10 a month.